Hello and welcome to today's video. What is an ideal trading capital? Well, let me tell you. I'll give you some examples. So the truth is, minimum or millions, it's your choice. What do I mean by that? So the reason why I said this is because it's really not important for you to know whether a minimum amount or even millions, both these amounts are, you can consider enough, or even it's not enough for few. So it's really irrelevant. It's really irrelevant for the amount you start with. The reason why it's irrelevant is because money or making money in the stock market is a secondary factor. So it doesn't matter you start with a minimum amount of 2, 3,000, 4,000, 5,000, whatever it is, or maybe you put in millions and millions of rupees. If you do not have the proper right aptitude, if you do not have the right knowledge, both these amounts are going to come down to zero. You're going to lose all of these. So it really doesn't matter how much you start with. What matters is your knowledge, your mindset, your skills. Confused? You thought you came into the stock market to earn money, and here I am saying that money is secondary, is it? Yeah, this is truth in a sense, because most newcomers who come into the market, they come in saying that, okay, I want my money to be doubled, tripled, 4 times, 5 times in maybe 2-3 days, a week, a month, whatever it is. That's what they have in their mind when they come into the stock market. That's what they think. That's what the perception is when they come into the stock market. People might have seen someone doing an options trading, maybe a call or a put option has given a person 3 or 4 times returns in a couple of days' time. And they say, wow, 3 times return in 2 days' time. Isn't this wonderful? I want this. I'm putting in 10 lakhs, I want 30 lakhs back in 2 days. This is the attitude that kills most of us. But am I exaggerating saying that you can get 2, 3 times, 4 times, 5 times return in a couple of days' time, maybe 2 days, 3 days, 4 days, a week's time? Is it too much? Am I saying it too much? If you put in a lakh, it becomes 5 lakhs in 5 days. Does it really happen in the stock market? Yes, it does happen, but it doesn't happen for the newcomers. That's sad, isn't it? Yes, the reason why it doesn't happen with the newcomers is because they have not gone through those phases. They have not gone through those hurdles to hone their skills and reach to a point where they can convert an investment of 1 lakh to 5 lakhs in 3 or 4 days. Yeah, it does happen. It happens when you play with options, futures. It really happens. It has happened with me. It has happened with a lot of people. But it also happens the other way around. Your 1 lakh would come down to 20,000. Your 1 lakh will come down to 10,000 if you're not in the right track, if you do not understand what's happening in the market. It has happened with me also. It has happened with others as well. So here is the challenge. Your investment going 3 folds, either in the positive direction or in the negative direction. Both is a possibility in the market. We'll see, we'll discuss why this happens and how you can control this. See, going into the market without knowledge is very dangerous. You may make it maybe a couple of times, 3 or 4 times. You may be successful for 5 straight transactions that you make, 5 straight trades that you have put in. The 6th one is going to wipe everything that you have earned. So this is the danger of the market. Step 1, learn the market. Step 2, look at what you have at hand. You should have a running income coming to you from your job, your business, or whatever you do in your life. You just cannot have a pile of money and straight away enter the stock market to earn more out of it. This does not happen. I'm sorry. If you have a notion, if you have a feeling about this, if you are thinking that this is how you're going to run your living, I'm very, very sorry. You just cannot do it. You cannot enter the stock market with just nothing backing you up. So if you're new to the stock market, if you're thinking to come into the stock market and make some money, first get a job or do your business or whatever it is. Find a steady stream of income coming your way to run your family, to run your expenses, and then if you have something to spare from that income, little bit of money, whatever it is, small, big, whatever it is, put that money into the stock market and learn the market to make the most out of that money, out of that investment. Look at your temperament. Can you hold on to your nerve when the market is down, when the market is volatile, when there is a war like the Ukraine-Russia war, when there is a pandemic like the corona pandemic, when there is a market crash like the 2008 market crash, when there is a scam like the 1992 Harshad Mehta scam? When these things happen in your life, when you have entered the market, things like these will start again. These things are part and parcel of the game. These things will stay, these things will haunt you. These things will definitely poke their nose in your investments. Can you stay calm? Can you hold on to your nerve? Can you hold on to your nerve in the 2008 crash? Did you hold on to your nerve in the 2008 crash? Were you able to hold on to your nerves when the pandemic hits? So that is very important. Now again, derive a daily risk for yourself. How much you can risk to lose on a daily basis. Not on a monthly basis, not on a yearly basis, on a daily basis. This is my daily loss appetite. 100 rupees, 200 rupees, 500 rupees, 1000 rupees, 5000 rupees every day I can manage. If I lose 5000 rupees a day, I can manage. If I lose 2000 rupees a day, I can manage. If I lose 100 rupees a day, I can manage. I cannot manage if I lose 150 rupees a day. So your appetite is 100 rupees. So find that amount. What is that amount that you can lose on a daily basis? Find that appetite for yourself. So the checklist is the most important thing. You should have something, a backup income coming your way that will support your family in terms of distress. In times when the market is not doing good, in times when the market is bleeding, it's that time you should have a steady income which should support your family and your personal needs. So that is the checklist, that is the most important criteria. Once you're through to that, once you put a tick to that, then you enter the market with the extra money that you have. And of course, after you have identified your daily risk appetite. So point number 3, desperate people. There are people who want everything right now. I'll just put in my money, I want it back in a day, 2 days, 3 days, 4 days time. I want it back with a profit, maybe double, or maybe 20-30% profit, maybe double, maybe 3 times, whatever it is, as much as I can get out of it. But I want it immediate. I want immediate profit. These people are desperate. They want to earn big from the market in a very, very short time. Stay away from these people. They are going to drive you crazy. If you have a plan, if you have a strategy, these people are going to destroy that strategy for you. These people are going to destroy the plan that you have. Your plan to make wealth, your plan to greatness, your plan to make big in this market will all be destroyed by people like these. Stay away from them. Then once you're through, step 4, put in a very small amount and start tasting the market. Whatever it is, maybe 2,000, 3,000, 4,000, 5,000, 50,000, a lakh, 2 lakh, whatever it is, whatever is small for you, put in that amount, take one small trade, depending on your daily risk appetite. Lose, that's fine. If you lose 100 rupees, that's what your appetite is. It's okay. You are within your appetite. You've lost 100 rupees, find out where you have gone wrong. Why did you take that trade in the first place? Who told you to take it? Why did you take it? Well, what are the triggers that you have seen that told you that this is going to be a good trade? And why it didn't happen the way you thought it would? So analyze that. Take small trades, lose, that's fine. Learn from it. Take the next trade, again lose, that's fine. Learn from it. Take the next trade, lose again, that's okay. Learn from it again. 4th, 5th, 6th, fine. Lose all the trades for the next 10, 15 straight deals that you have taken. But after those 15 trades that you have lost consecutively, you've probably lost or wiped off your wealth by 60-70%. But after those 15 days, you should come out a wise man. You should know what to do in future in similar situations like this. You might have wiped off 50-60% of your capital. Consider that as your fees to learn the stock market trading. You have learned right with an in-hand practice. That's the biggest teacher that anyone can get. Do it with your own hand, experience it, feel it, feel the pain of losing, feel the regret of losing, feel the criticism that people are going to give you, feel all those things and come out with a well-informed and a nice mindset. And when that happens, you now have a control on the interplay. Remember, in the previous one or two videos, we have discussed about how fear, greed and regret, all three emotions, they come together and they be heavy on your head while you make a trade. This is where you can get control of the interplay of these three emotions. If you haven't seen it, I'll give the link in the description. So it's a video on how to look at losses and analyze risks efficiently. So please do have a look at it. Step 5, there is no single strategy in the market. You have to understand the market trends, and then take a trade based on your understanding. The most important factor is don't change your strategy very frequently. If you have a strategy, hold on to it. Hold on to your strategy for a very long time before you finally discover that it's the wrong strategy. It's then when you go and you can change your strategy. Otherwise, stick to your strategy. If it is working out for you, do not change it. Maintain a data sheet for all the trades that you have taken so far, in your study. Why is this important? This is important because it gives you the data points at which you have entered a trade, at which you have withdrawn from the trade, the points where you have placed an order, the points, the volumes, the push, the pull, the pressure that was at that point of time when you placed an order to buy it, the pressure, the sell pressure at a point of time when you placed a sell order to sell your holdings. So all these informations in a journal is going to give you the data point. So having a data point, having an entry for all those points where you have made a trade, and all those entry points, all those values, all those numbers, and they'll give you, or they'll help you to strategize or to plan or chalk out a strategy for your next trade. Step 6, futures and options. I think I just touched base a little while earlier on this. It's very lucrative. You get 2 times, 3 times, 4 times, 5 times return in a very short time. Stay away from this. If you're new into the market, stay away from futures and options. They are very lucrative, but these are wealth destroyers. These are the destroyers of people who enter into trading futures and options without experience. So if you do not have an experience of at least 4 to 5 years into the market, understanding the market, understanding how trading works, making good profits out of trading consistently, religiously, year after year, if you have been a profitable trader, then probably then you can think of getting into the futures and options market. Otherwise, please stay away from the futures and options market. It's not for newcomers. Absolutely not for newcomers. Okay? Don't put your money in it. Even if your broker says, okay, fine, I'm going to do it for you, I'm going to help you out, you yourself, being a newcomer, do not do it. Stay in the market for the next 3, 4, 5 years, learn the market thoroughly, understand it, then take your broker's help to enter the futures and the options market. Then you will understand what he is doing. You will understand what he is telling you. You will understand what he is trying to do. And if you find anything fishy, you can catch him. So again, as I said, as I started off with this video saying, you can start off trading with a small amount, as small as maybe 2,000, 3,000, 5,000, or maybe you can go in lakhs and lakhs of rupees. It really doesn't matter. It's all up to you. What matters is, are you learning? Are you learning from the market? If you're learning from the market, you entering with 2,000 rupee is not a problem. You entering with 1 lakh rupee is not a problem. You entering the market with 50 lakhs of rupees is not a problem. So the entry capital is not the money. The entry capital is your knowledge. Till then, SG signing off. Goodbye.